You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 25th day of July, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. First live broadcast is our live training room. That's from 9:30 a.m. to 11:30 a.m. Eastern. That broadcast is reserved for members only and those who are taking their 1-week free trial. If you haven't taken your 1-week free trial, go to mytradingiq.com, and at the top of the page, there's a button that says 5-day free trial. Click that and your journey begins. It doesn't matter what day of the week or weekend or hour of the day that you sign up for the trial, you're going to get 5 consecutive trading days in the live training room and unfettered access to everything that our lifetime members have access to, and there's no credit card required. So if you're thinking, well, gee, today's Tuesday, I should wait. Well, you can wait. Or you could go ahead and take advantage of the free trial, and it will stretch over the weekend into the beginning of next week. So don't concern yourself about that. Trial is 5 consecutive trading days, even when it stretches over a weekend. Now, when the live training room ends, we take a 30-minute break. We come back for this broadcast, which is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast. Best way is to go to mytradingiq.com, scroll down to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and you're done. Going forward, every trading day, you'll get an email about an hour before this broadcast starts. At 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Now, doing it that way gives you access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days that you're out of the office, away from the desktop, but you still want to join this broadcast live. And there'll be days that you're just busy and can't join live, but wish you could. We have a solution. It's called our YouTube channel. youtube.com/CFRN. Easy to remember. You already know youtube.com, just remember CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,200 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, It's a great way to get to know who we are. Thanks to YouTube, you can scroll back 6 weeks, 6 months, a year, 2 years, even more, and just pick some days at random. You don't even have to listen to the whole broadcast, but make sure you do fast forward to the part where we're doing the recap of the logic alerts and the concierge trade alerts. And also make sure you fast forward to the part where we're doing the recap of that day's live training room. If you do that, you'll quickly see the thread of connectivity and continuity that's woven through each and every daily broadcast. youtube.com/CFRN. So we'll open with our daily devotional and a word of prayer. And then we'll talk for a little bit. If you're tuned in via the YouTube channel right now, you know the title of today's broadcast is, How Will the Presidential Election Cycle Affect the Markets? Futures and stocks and everything else. So we'll talk about that. And then we'll start taking a look at each of the individual markets. 45 minutes into the broadcast, Michael will join us and he'll give us a recap of what happened this morning in the live training room. And then 1 hour into the broadcast, we'll go live on the TradingView platform, do some trading for a half an hour, and then we'll finish up any part of the recap of the alerts that we haven't covered as of yet. And then we'll wrap things up with our good word for the day. Now, our topic is developing a habit of gratitude. 2 weeks ago, we talked about habits. We all have them, good ones, bad ones, ones we'd like to change. But this week, we're talking about developing a habit of gratitude. Whatever the circumstances, whatever the situation, something to be grateful for. Our scripture today is 1 Samuel chapter 8. And it talks about rejecting God as the king. Starting with verse 1. When Samuel got to be an old man, he set his sons up as judges in Israel. His firstborn son was named Joel. The name of his second, Abijah. They were assigned duty in Beersheba, but his sons didn't take after him. They were out for what they could get for themselves, taking bribes, corrupting justice. Fed up, all the elders of Israel got together and confronted Samuel at Ramah. They presented their case. Look, you're an old man, and your sons are not following in your footsteps. Here's what we want you to do. Appoint a king to rule us, just like everybody else. When Samuel heard their demand, give us a king to rule us, he was crushed. How awful. Samuel prayed to God. God answered Samuel. Go ahead and do what they're asking. They're not rejecting you. They've rejected me as their king. From the day I brought them out of Egypt until this very day, they've been behaving like this, leaving me for other gods. Now they're doing it to you. So let them have their own way. But warn them of what they're in for. Tell them the way kings operate, just what they're likely to get from a king. So Samuel told them, delivered God's warning to the people who were asking him to give them a king, he said, "This is the way the kind of king you're talking about operates. He'll take your sons and make soldiers of them. Chariots, cavalry, infantry, regimented in battalions and squadrons. He'll put some to forced labor on his farms, plowing and harvesting, and others to making either weapons of war or chariots in which he can ride in luxury. He'll put your daughters to work as beauticians and waitresses and cooks. He'll conscript your best fields, vineyards, and orchards and hand them over to his special friends. He'll tax your harvests and vintage to support his extensive bureaucracy. Your prize workers and best animals he'll take for his own use. He'll lay a tax on your flocks, and you'll end up no better than slaves. The day will come when you will cry in desperation because of this king you so much want for yourselves. But don't expect God to answer. The people wouldn't listen to Samuel. No, they said, we will have a king to rule us. Then we'll be just like all the other nations. Our king will rule us and lead us and fight our battles. Samuel took in what they said and rehearsed it with God. God told Samuel, do what they say. Make them a king. Samuel dismissed the men of Israel. Go home, each of you, to your own city. Now, I'm sure you're probably seeing some similarities between some of the things that are happening in America today. I encourage you to study this scripture. Again, it was 1 Samuel chapter 8, and I was sharing from the Message translation. But I really do encourage you to study it. And think about our current situation. 1 Samuel 8 teaches us that desires must be submitted to God's word rather than cause resistance to God's word. Wanting what God hasn't given us can be dangerous, and demanding what God withholds or warns against, well, that's a recipe for disaster. Prior to 1 Samuel 8, God was Israel's king. This set them apart from surrounding nations ruled by powerful earthly kings. If Israel followed God alone as king, they would prosper and flourish. But Israel grew weary of God's plans. They wanted to be led by a visible human king. Rather than live by faith in God, an earthly king would allow them to live by sight. As Israel grew covetous and jealous of other nations, discontentment about what God had given them soared. They questioned if God was looking out for them or withholding something good from them. Gratitude grew silent while grumbling spread. And, as we just read, they eventually demanded a king. It's not only that they were swayed by the ways of the world rather than the ways of God, but it's that they put something or someone in God's place. That's the very definition of idolatry. They looked to an earthly king to do what only their heavenly king can do. They stopped seeking after God and looked to humans instead. To make matters worse, Samuel again warns Israel that this will not work out like they think. Idols never do. Israel thinks this will give them more power and less fear of other nations, but it ends up stripping them of freedom. They think a king will provide security, and it leads to complete insecurity and instability. Though they cry out for a king, they will soon cry out because of their king. Idolatry always works this way. The glimmer of that shiny object ends up being a hook, snaring us. Things we think offer freedom enslave us. They now cause stress, fear, and anxiety as they crumble and topple over. When we put something or someone in God's place, it never follows through on what it offers. If left unchecked, an increase in ingratitude allows idolatry to slip in. We no longer just wish things were different, but desire morphs into a demand, a sinful demand. Idolatry is something we'll sin to get or sin when we don't get it. Rather than bringing our desires to God in hopes to receive them in His timing and plan, we pursue them apart from Him. These signs and symptoms of growing ingratitude and increasing idolatry should alarm us. None of these things can give us what we think they can. The discontentment will only grow unless it's fought with thanksgiving, trust, and rest in God. Think about where you're tempted to envy, jealousy, and idolatry. What steps do you need to take to avoid their snare? What lies are you believing, and what promises and truths do you need to fight them with? Join me in a word of prayer. Heavenly Father, we come before you with humble hearts, seeking your guidance and wisdom as we meditate on the scripture we just read about the Israelites' desire for a human king, despite your warnings about the potential consequences. So, Lord, help us to learn from this scripture. Help us to trust in your perfect plan and timing for our lives. May we seek your will above all else, knowing that you alone are the true King and the ultimate authority over our lives. Forgive us for the times we've been impatient and sought after worldly solutions instead of waiting on your divine guidance. Teach us to rely on your wisdom and direction, knowing that your ways are higher than our ways. In a world that often promotes self-centered ambitions and worldly desires, help us keep our hearts fixed on you. May we seek to live in alignment with your word and to follow your commandments faithfully. And Father, grant us discernment to recognize potential dangers of seeking earthly kings and worldly comforts. Instead, may our hearts be set on the heavenly kingdom and the eternal promises you have prepared for those who love you. Empower us to be a people of prayer, constantly seeking your face and listening for your voice. Help us to align our desires with your will, trusting that you know what is best for us. Thank you, Lord, for your unconditional love and mercy, even when we falter in our faith. Strengthen us to be faithful followers, seeking to honor you in everything we do. It's in Jesus' name that we believe and pray. And everybody said, Amen. Amen. Well, happy Tuesday. I hope it is a happy Tuesday for you, whoever you are, wherever you are. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow is up 66 points. The Nasdaq's up 90. S&P 500 is up 13. And the Russell 2000 is up almost 6. And in the commodity basket, crude oil up 88 cents, trading 79.62 last. That's a gain of over 1%. Gold up $4.10, trading 1966.30 last. Silver up 30 cents, trading 24.88 last. And that's a gain of 1.25%. In the Asian markets at the close, Nikkei down 18, Shanghai up 67, Hang Seng up 766. Now for the Shanghai, that's a gain of over 2%, and for the Hang Seng, that's a gain of over 4%. In the European markets at the close, FTSE up 13, the DAX up 20, the CAC down 11. So we had a mixed day in Asia. It was a mixed day for the UK. But so far, it's a big green Radio Tuesday here in the US of A. And tomorrow is Fed Day. So be careful out there. All right. Title of today's broadcast is how presidential election cycles influence the markets. Presidential election cycles can have a significant influence on the futures market, the stock market, all the markets, as they introduce uncertainty, shape economic policies, and impact investor sentiment. Understanding the typical patterns that occur during these cycles can help traders and investors navigate the markets more effectively. Here's how presidential election cycles can particularly influence the futures market. Leading up to a presidential election, uncertainty tends to increase in the futures market. Investors may become cautious and adopt a wait-and-see approach as they assess the potential policy changes and their implications on various industries and sectors. This uncertainty can lead to increased market volatility and fluctuation in prices. Number 2, presidential candidates often propose different economic policies that can significantly impact various sectors of the economy. Traders closely analyze each candidate's policies, such as tax reform, trade agreements, infrastructure spending, and regulatory changes. The futures market reacts to policy expectations, certain sectors benefiting or facing challenges based on the anticipated outcomes. Now, election night can be a highly volatile time for all markets, and I realize election night is still quite a ways off. As always, we want you to be thinking and be preparing and understand what's transpiring. As election results start coming in, markets can experience sudden and significant price movements based on the perceived implications of the election outcome. Traders may take positions in response to these developments, leading to heightened volatility. Once the election is over, the market often experiences a relief rally if the results align with investor expectations. Conversely, an unexpected outcome may trigger a correction or market downturn. The response in the markets depends on how the market perceives the new political landscape and potential economic implications. The markets continue to react to the policies and legislative initiatives of the newly elected president and administration. The implementation of proposed policies can influence market sentiment, corporate earnings, and economic growth, leading to shifts in price. The midterm elections, which occur 2 years after a presidential election, can also influence the markets. Midterms can bring changes in the balance of power in Congress, as we recently saw, potentially affecting the direction of economic policies. Market participants may adjust their strategies based on the midterm election outcomes and their potential impact on the economy and the markets. It's important to note that while presidential election cycles can influence the markets, they are not the sole determinant of market movements. Various other factors, including economic data, geopolitical events, global trends, and central bank policies, also play significant roles in shaping market dynamics. Traders and investors understanding the potential impact of presidential election cycles on the markets can help you make informed decisions and manage risk effectively during periods of increased uncertainty and volatility. So there you have it. Every time you turn on the TV, it's going to be about the primaries, about the debates, and as we approach election day, volatility will increase. As futures traders, volatility is our friend. That's volatility well managed, which is why we teach aggressive risk management. A sideways market doesn't present a lot of opportunity. But the beauty of futures is that whether the market is moving up or moving down, there's plenty of opportunity to find high probability, low risk trade opportunities. Flat market will rob you of weeks, months, even years of good work that you've done. So as we get closer and closer to election day, Make sure you manage the volatility and your risk efficiently and effectively. Logic 247, our 24/7 around-the-clock E-mini alert service. We're in week 260. Over the last 260 weeks, we've issued over 14,700 individual handcrafted alerts. Since the markets opened Sunday night, we've issued a total of 19 alerts. 2 never triggered. Still waiting on 5. That gave us 12 actionable alerts, of which 1 or 8% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure, and a very simple process that we teach all of our lifetime members in their unlimited one-on-one mentoring sessions. The logic alerts are based on current price action, but the alerts come out well ahead of them triggering, so that you have time to receive the alert, study the 30-minute chart, see the window of opportunity that the alert represents, and then be prepared to take action when price reaches the entry point. Over the last 260 weeks, we've averaged 20% or less of the alerts being stopped out. So the week is young. Today's only Tuesday. Tomorrow, when the Fed announcement comes out, there will be high volatility. So there probably won't be a lot of alerts until after the Fed announcement and the market returns to its normal volatility. The caveat, of course, is you never risk more than the potential profit in a trade. While an alert itself might have $1,000 or $2,000 of potential profit, if your plan is to get out at the initial target, then your risk should be commensurate with the profit you plan to take out of the trade moves in your direction. Now, we still have our original alert service, the concierge trade alerts, and they're a little bit different. Number one, they're based on historic price action. When historic price action meets current price action, that's where you'll find some of your best high probability, low risk trade opportunities. The CTAs are issued as a static report shortly after the Globex open. Last night they came out at 6:40 p.m. The market opens at the Tuesday session began last night at 6 p.m. Eastern. The Tuesday session will end today at 5 p.m. Eastern, and then tonight at 6 p.m. Eastern will be the beginning of the Wednesday session. Now, what do you do with this report when it comes out? Number one, you only need to worry about the markets you actually trade. We'll use the ES as an example. Go to your 30-minute chart and make note of where price is at the time the report is published. It's always going to be between these two numbers. Then draw a line in the sand at the long target and a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. Price gets above the 30-minute BBC. That stands for Bull Bear Cross. When price crosses above it, it'll be the green line you see on my charts. When price gets above it, whether it's on the 30-minute chart or the daily chart, we anticipate higher prices. When price gets below the 30-minute BBC or the daily BBC, we anticipate lower prices. The CTAs and the logic alerts are all based on the 30-minute chart. That's why with the logic alerts, there's time built in for you to get the alert, study the chart, understand why it's an alert. That's your first step toward becoming self-sufficient. You do not want to spend the rest of your life depending upon someone else to tell you when to get in or when to get out. You want to learn to be able to look at a chart, see the opportunity, and then take advantage of it. So if price gets above the 30-minute BBC, again, that'll be the green line on my charts, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. It's pretty simple. Now, with the CTAs, you have to look left to spot potential obstacles. Previous swing highs or swing lows that can become current support or resistance, and you learn how price behaves at a weekly trading zone. That's important because price is always trying to reach a weekly trading zone, from the minute the markets open Sunday night till they close Friday afternoon. If price is above the 30-minute BBC, it's trying to get to the zone overhead. If price is below the 30-minute BBC, it's trying to get to the zone below. We've published the zone since December 14th of 2009. Our members and trial members receive them Monday morning at 6:15 a.m. Eastern, so they have time to get them on the charts before Wall Street even wakes up for the week. The difficult part of all this is you have to resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Now, we've spent many years and a lot of hours and a lot of late nights making things as simple as we've made them. So don't fall into the trap of thinking, okay, I'll add more stuff, more indicators and more oscillators, and that will help me be a better trader. What it will do is it will make you a confused trader. Okay? Once you understand that price flows the same across all markets and all time frames, everything changes. Let's look at the daily chart. Now, you may not trade the S&P and you probably don't trade the daily chart. However, institutions, the ones who actually move price because of their account size, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Their accounts are denominated in hundreds of millions, billions, even trillions of dollars. The average retail trader has an account in the thousands or tens of thousands of dollars. So by looking at the daily chart, you can see what the deep pockets are doing. Are they buying? Are they selling? Where is important resistance? Where is important support? No matter what market you trade, even if you don't trade the S&P, maybe you trade crude or gold or Walmart or British pound, Bitcoin. If you will spend a little time, 2 minutes, with the daily chart before you start trading, it will help you tremendously. Now the step line has crossed blue and climbing, but the market is extremely bullish. Okay? When the step line crosses, typically see a pullback to the BBC, not only on the daily but on the 30-minute. There it is, there, there, and you'll notice the pullback holds more often than not. It's almost as if the market is defying gravity here. The high put in July 19th. Now that's not an all-time high, but it's the most recent swing high. That's what the market's gunning for right now. Now you'll notice on that day we closed well off the high of the day. In fact, if you look at where we closed, which would be the top of the green body, you've got 1, 2, 3, now 4 sessions. We're just now overcoming that green body. So with the Fed coming tomorrow, I have no doubt, because price will swing wildly both ways, no matter what the announcement is. If there's no rate hike, the markets will be extremely volatile. If there's a quarter point, a half point, or a point, whatever the Fed does, always creates volatility. And trading those type of economic events is like gambling. And the very core of what we do, what we've put together, and what we teach removes the gambling aspect from trading. If you've ever told somebody, hey, I think I'm going to become a trader, or I'm trying to learn how to be a trader, they've probably said, oh, that's just gambling. Well, if you don't know what you're doing, if you don't know what you're seeing, if you don't understand what's taking place on the chart in front of you, then they're right. It is gambling. Trading this morning's economic report, gambling. Trading the Fed tomorrow, gambling. You want to wait for the market to absorb whatever the economic report is and go back to its normal rhythm before you get in. If you have the self-discipline to do that, you just might be a trader. All right, Michael should be joining us here in a couple minutes, so we'll get started. The vertical line on the 30-minute chart separates today, Tuesday, from Monday, from Friday, from Thursday, and so on. Now, remember, the weekly trading zones come out Monday at 6:15 a.m. Eastern. So on yesterday's broadcast, you were looking at last week's zones, because all the alerts that come out on Sunday night are based on the previous week's zones. Once the new zones come out, then all alerts, logic, and CTAs are based on the current weekly trading zones. So the market opened last night at 6 o'clock. It came down to the BBC. When price pulls back to the BBC, it holds more often than not. When price pulls down to a weekly trading zone, it holds more often than not. When price drops to a zone, we expect support. And when price rallies up to a zone, we expect resistance. Again, we've published the zone since December 14th of 2009. And that has not changed in any way. So, price consolidated at the BBC. Red and falling turned to blue and climbing. That's the perfect elixir. This candle opened at 45.85 and ran up to 45.88. So, goal for the day in one candle. We got a leg and a retracement. The pullback held, and we ran right to the target to the tick. We then pulled back. We got below the BBC, but just as I told you, you have to look left to spot areas of resistance and support. You also have to look above and below. All of our traders do, as price was dropping to this zone last night, 45.79/80, expect support. And as price rallied up today to the zone overhead at 45.96/97, they knew to expect resistance. We've now got 3 30-minute candles that have not broken through the weekly zone. The Dow consolidated Got a leg and a pullback, and a leg and a retracement, and then a leg right up to the target. On the Russell, we consolidated at the BBC, caught a leg and a retracement, a leg, and then we got below the BBC. Remember, that's the green line, bull bear cross. Bullish above it, bearish below it. And price attempted lower, but it ran into this area of support previously defined yesterday. That sent price back above the BBC, right up to the target. Price then pulled back to the BBC and ran to the target again, and this time hit the weekly zone. Another pullback, another run at the target. NQ, consolidation at the BBC, and a leg, took us through the zone, right to the target. We get a pullback to the zone, another run to the target, a pullback to the zone and the BBC, and we trade through the target. When that move runs out of steam, we pull back to the BBC, the pullback holds, and now we put in a higher high. So we had a high, a higher high, and now a higher high. So the question is, can the NQ, can the institutional buyers stay focused, stay committed, and get us up to the next zone? Time will tell. On crude, price dropped below the BBC. Now you see the area where it found support. That's why you're always looking left, previous swing lows. Because that low became that low, became that low. Then we pushed above the BBC, ran right through the target. Now we're in a retracement mode. Got a bullish cross. Once these highs are taken out, if they are, then we could make a run right up to the highest weekly zone. Michael, are you there? Are you there, Michael?
I am here.
Okay. All right, guys. We'll pick back up with gold after Michael gives us a recap of the live training room, and we do some live trading on the TradingView platform.
All right. Here we go. Ready to go.
All right. Looks good.
All right. Good afternoon, everyone. Today is Tuesday. Is Tuesday, right? Yes, Tuesday, the 25th day of July, 2023. All right. So if you have not taken a free trial with us, go here to mytradingiq.com. Right here it says sign up for your free 5-day training now, 9:30 to 11:30 Eastern time. Once you do that, you will be sent all the information you need to get into the room in the morning. If you're going to do that, you should go here and go to trading platforms and download whichever trading platform applies to you. What you're going to be seeing in here is TradingView platform and the DT Pro platform primarily. We also have it on NinjaTrader. So if you have a NinjaTrader platform, you can use that as well. I should go to trade rules right here and read over the trade rules. Maybe watch this video right here. Right at the very top says setup video. Watch that video. And that should help you get your chart set up. If you have any trouble setting up your charts, don't let that be a stumbling block. Right? Get in touch with us. Our email address is support@cfrn.net, support@mytradingiq.com. Either one of those will get to us, and we'll set up a one-on-one meeting with you to make sure your desktop is set up. Do not let that be a stumbling block. Okay. So the results from today. First, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures. Today is the 25th day of July, 2023. Made 42 ticks in the NQ, 23 ticks in the Russell, 1 tick in gold, and we're nothing on the ES again. So I noticed something today in the room that is really unusual so far this month, and we only have a week left. We're minus 400 on gold. We haven't been minus anything at the end of the month yet this year. It's kind of weird. This month has been kind of strange. So today it took 21 minutes and 7 trades to get to the goal. At that point, we were up $770 a contract. I'm sorry, that's not per contract. We're 110 per contract. 770 total. And we only took a total of 11 trades this morning. So on the month now, we're at $4,025. That's over 16 trading days, averaging $251 per contract per 2-hour trading day. Now, if you were to quit trading when you get your goal for the day, and you were to add 1 contract per month, that's why we're at 7 contracts now. We're in the 7th month. You would have only had to work 43.3 hours so far this year, and you would have averaged $1,778 per hour on the year. Okay, $1,778 per hour on the year. All right, now let's get into the actual trades. All right, we didn't have a single trade on the ES today, so I guess I'll start out with the ES and we'll just look at it briefly. Okay, you see all the no trade zone in here on the ES? There was 1 green arrow here on the ES, and that was when the news came out at 10 o'clock. We had high impact news come out there, so we weren't doing anything with that. At that point, we had this level right here that I said, this looks like where it's trying to get to, and well, it just got there during the break. The ES was just not tradable today. There was no reason to trade the ES in this time frame. Now, if you were to drop it down to a smaller time frame and change the sensitivity setting, I'm sure there probably would have been a few spots in here. Let's just go do that really quick. We drop down here and change the sensitivity setting. I think I am going to change this maybe tonight. Put the sensitivity at the top. Change it like that. So your sensitivity setting changes. Then you have a couple more opportunities in there, all of which turned out to be pretty good. Just saying. Let me go put that back. Hold on. What time is it? 12:53. Okay. All right. So that was the yes. We didn't have a single trade on the yes this morning. The golds, we only had 1 trade on the gold. There was a break-even trade. So let's look at that really quick. Actually, I had a blue arrow there instead of a yellow arrow, but I think that's supposed to be a yellow arrow. So I'll just change that to yellow, yellow, and we had 1 break-even trade there on the gold this morning. Oh, actually, no, that was a blue arrow. I had 1 tick. Sorry, I had 1 tick on gold. So that was correct to be in a blue arrow. Change it back. I had 1 tick profit there. And there was one other trade in here that I didn't take. I guess there were a couple of trades in here that I didn't take. Go all the way back. This is where the news came out. In the pre-market, there was some movement. Then we got into the markets opening up right here. We didn't have anything. The news came out. We left it alone for a little while. There were black arrows in here, but I was waiting for the green arrow to come and give us something, and the green arrow didn't come till all the way over here, and I missed it. We weren't really coming off a higher swing there either. That's probably wouldn't have been a great trade to take. This right here, I was looking for the 50% retracement, and that is just about what this is. It gave us the green arrow off the ribbon. I got 1 tick out of it, and I was looking for it to get all the way back up to the prior swing high, which it did right here. It did 100% retracement of that 50% retracement, and now it's turned back down. I think it's probably going to fail right here. I don't know for sure, but that's my thought on that. The ES, I already told you we didn't do anything with the Russell. The Russell is where we had the majority of the trades today. Let's get into that. Go back here to the beginning. Let me bring up the question box and see if anybody's got any questions. You are you, Bart? Okay. Let's go back here and here and here. All right. So right here at the open, there was a green arrow right here. Now this was after trades got disqualified by the black getting into the red right there. Then it gave a green arrow when it got out of the red. I didn't do anything with that, but the next trade that came in right here on the Russell, looks like I think I got 1 tick. Then I got 2 ticks to get me to 3. Then I got 1 more tick to get me to 4. And then over here, finally, I got something significant. I think I got 11 ticks to get me to 15. And then I'm pretty sure I got I got a few more right here to get me to 18. And then right here, 4 more to get me to 22. I believe that's where we got the goal for the day, right there. Is that right? No, that's not where we got the goal for the day. It was somewhere in here. Is where we got the goal for the day. But I think right here we got 4 more to get me to 22, and then I had 1 more trade that we did on the Russell somewhere. I was doing all the trading during there. I had 1 more trade for 1 tick that got me to 23. I don't know exactly where that was. It could have been in here somewhere. It was after I was done with the training, so it was, or it might not have been. It could have been right here. This right here. I know I talked about this area right here, but I don't know if I took any trades there. But anyway, we had 1 more tick that got us to 23 on the Russell. And that's where we ended it on the Russell. And the Russell is where we had the majority of the trades today. It is now 12:57. What am I trying to do? This. Okay, so we'll get to the NQ right now. And on the NQ, oops, let's go all the way back here. On the NQ. All right. So here we go. Our very first trade on the NQ was right here. We ended up with a break even on that one. We did not have a bunch of trades on the NQ. We had a break even on that one. Then on this one, I don't know what I got on that one. This one we got a plus 30. Okay, and then this one we got a plus 12, and that put us at 42. So I didn't write down that one, whatever that was. We were looking for the NQ to get down to this level right here. That's 1600 level. I don't know if it actually did, but we didn't do any more trading in here for a little while. Yeah, it did right here, the 15,600. It didn't actually get there, did it? Got really close. We had 1 more trade in here that was a break even, and I believe that's where we wrapped it up with the NQ. Now, during the break, this was during the break right here. We had 1 nice trade right there that I missed. Green arrow right here that looks like it went enough to get the stop to break even. You wouldn't have done anything else in that direction. Change directions here, but I wouldn't have done this because the long-term direction is too flat. Wouldn't have done this, same thing, long-term direction too flat. I wouldn't have done anything in here. All the way over to here, I still wouldn't have even done this. I mean, in hindsight, it looks like a great trade, but I wouldn't have done that. I'd be looking for a green arrow down right in here right now is what I'd be looking for. Okay. And that was it with the NQ. All right. So we ended the day like this. Plus 42 on the NQ, plus 23 on the Russell, plus 1 on gold, plus 335 per contract. Today took 21 minutes and 7 trades to get to $770. And we took a total of only 11 trades this morning. Okay. All right, so now we're going to jump into live stream. Let me get over here to the live stream. I refresh on this. And if you have not taken a free trial with us and you want to, by tradingiq.com, click on that, sign up for the free trial. All you have to give us is your name, your email address, and whatever trading platform you're on. Give us your username or your machine ID if you're on NinjaTrader. Okay. You should download the trading platform, look at the trade rules, watch the videos, get a good look at what you're going to be getting into in the room in the morning. Okay. That's all you have to do. Now we'll jump over to the next thing over here. Okay. Here on that. Start stream. And okay, I gotta minimize this a little bit. Make it fit over here. There it is. Okay. All right. So, yeah, again, if you have not taken a free trial with us and you want to, just go to here on mytradingIQ.com, click on this right here, take the free trial. All right. So right now, what we are looking at, these 4 markets. If anybody has, for the live stream, if anybody wants to see any other markets, all you have to do is let us know, okay? Just type in a symbol and we'll take a look at whatever market you want. And you can see the ES right here was horrible this morning as far as trading. I mean, it wasn't horrible like it stopped us out a bunch of times. It was horrible that it didn't give us any trades. All these areas right here, those are all no trade zones this morning. So we only had 1 trade zone, and that was, I mean, one area right here that actually sort of triggered a trade, but that was right on top of news at 10 o'clock, high impact news. So we didn't trade anything. I don't know what the S is going to do during this session. Probably not too much. But anybody that's coming in right now to the live stream, if you're coming in now to the live stream, or if you're coming in later in the live stream, if you're watching it later on, because I know a lot of people do that. Tomorrow morning, starting at 9:30, we're going to do another live stream. Probably type that in. Tomorrow morning, starting at 9:30 to 10, we'll do a live stream then, so you can get into the room with us tomorrow morning if you want to. Okay, that'll be Wednesday morning. Let me try to spell everything right. Wednesday morning, that's 7/26/23. Okay. All right. So right now what we're looking at, the long-term direction here on the gold is kind of flat. We want to see it go down a little bit more. If it drops a little bit more and then pulls back, that'd be a great opportunity right in there. On the NQ, we have a higher swing in place. We need that to pull back. You see how it's all kind of choppy right here on the NQ in the slingshot. It's bouncing around quite a bit. We have all these black arrows. That's because it keeps coming out of the oversold. It keeps coming out of the oversold while we have bullish separation, and long-term trend is bullish. We don't have any trades in here right at the moment. Okay, we don't have any trades in here right now. So if you guys want to look at anything else, if you want to look at any other symbol, just type in a symbol. Even if it's the same symbol we looked at yesterday, if you want to look at it again, just type it in. I'd be happy to go over it again with you. Okay. All right, so what we want here is it's kind of a deep pullback on the NQ. We want to see the gold drop down a little bit more. We want to see the NQ pull back just a little deeper. If I blow this up like this, then I'd like to see it pull all the way back down here to the ribbon. Okay, that'd be great, but now we're oversold. And this is probably the most oversold we've been on these last few trades. So what we'd be looking for here is an up close that is going to pull this out of the oversold. Right? I kind of want to go look at the long-term stuff. See what's going on with the longer term stuff here right now too. But you see that did bring it up out of the oversold. It's another black arrow, brought it up out of the oversold. What it should do is put in another higher swing, like all of these right here. Just every one of them put in just a little bit higher swing. This should do the same thing. Okay, so here it is. And it just bumped my stop to +2 ticks actually. And it just took me out with +2 ticks. Again, if you haven't watched this before, with the NQ, once I put the trade on, getting my stop to break even after that, break even plus a tick, all that is automated. I have strategy in here, an automated strategy that puts a 20 tick stop and a 30 tick target on the trade. And after I get 8 ticks in profit, it bumps my stop for me automatically. Okay, that's what that one just did. So you see that took me out with a plus a little bit right there. Now it's got to put in a higher swing before I'll trade again in that direction. Okay, it's got to continue the trend and put in a higher swing before I'll trade again in that direction. Okay. All right. So let's. I want to see what you guys are looking at. A second. Just bring this over. Okay. Yeah. You guys don't need to see this stuff in there, right? Go on. There you go. Okay. So now the ES is pulling back. The ES slingshot is not in the oversold. So we're not going to get any kind of an arrow. We haven't touched the ribbons, so we need to kind of trade. All right. To initiate a trade, it's either got to touch the ribbon or it's going to be in the oversold for a long trade. While the context, this green background, while that is bullish, meaning the black line right here is in the green. To initiate a trade, price has to hit the ribbon or it has to get oversold down here. Okay. That's what we're looking for now. So we almost hit the ribbon, not quite. In hindsight, it might look like it actually did hit the ribbon. We didn't hit the oversold here. So I'm gonna wait. There, now we're gonna have it. Okay, so we have a low here. Now watch this. Okay. We have a low here on this bar of 96.25. So I'm gonna buy 98.25. Why 98.25? Well, because these are 7-tick range bars, right? And with the 7-tick range bar, the highest that it can go, with the low right where it is, the highest it can go is this right here at 98. So if we get it up close here, it's going to be a long trade, whether we do anything with the slingshot or not. This will be a long trade if we get it up close, and it is right there. That is a valid long trade. So I wanted to be long if we had an up close on that bar, and now I am, and trigger me in the trade. Okay, so you don't have that. What do they call it? FOMO. You don't run into that because you can put the order on ahead of time. Okay, be proactive and put that order on ahead of time with range bars. Now, let's just once again take a look at the elements of a trade setup. Okay, here they are, right here. Trade rules. Every trade has an entry, a risk management, and an exit. We've got the entry done exactly right. Now the risk management, this is a 7-tick range bar. So down here, 7-tick range bars have a 10-tick stop. That's what that is. That trails to break even after 4 ticks in profit, but we haven't had 4 ticks in profit yet. So we got to wait for that part. But let's look at the trade exit right now. Look left for the prior swing high for area of support or resistance. And also check the DOM to see what price is searching for. Okay, so the DOM's given us a couple of good numbers, 4601, 9950. A couple of good numbers on the upside. Nothing really significant on the downside. 97 maybe on the downside, but we need to get 4 ticks in profit to bump the stop to break even and get the risk off the trade to begin with. All right. But as far as the rest of it's concerned, we had a higher swing. We had long-term direction is bullish. We tested the ribbon. We gave an up close. So to go back here, this is a long right here. A long without the slingshot. Okay, we didn't get the slingshot, but we did have the black line in the ribbon was on the bottom and it was in the green. Price did touch the ribbon on the pullback. Okay, so we'll look at all that. The black line is on the bottom in the green. Price did touch the ribbon. That's all we need. We didn't get the slingshot because it didn't go down to oversold or come out of oversold. Okay, so what we anticipate now is that it's going to get up to 46.02, which happens to be the high of the day right there. Okay, that's what we anticipate right now. Now we will bump the stop to break even once we get 4 ticks in profit. So as soon as it ticks on this level right here, we'll bump that stop to break even. See that number right there? It wants to go through that number and keep moving up. So the numbers on the upside that it's looking at right now, 4601, 4601.75. Okay, 4601 and 4601.75. We just gotta wait that one out. We don't have anything here on the NQ, the long-term direction is flat. We don't have anything here on the Russell, the long-term direction is flat. And the gold, it's gone down a little bit deeper, a little bit farther down, but it's not a trade setup yet. I'll put this here because we can watch the gold at the same time. Okay. I don't know if anybody's asked any questions in there yet. Okay, nobody's asked any questions. Anybody that's watching in the live stream, if you have any questions, just type them in. Okay. We need 4 ticks in profit here to hit the break even button. Okay. Now that strategy that I talked about that I have in the DOM for the NQ, I do have a strategy created for the ES, or for anything that's on the 7 range as well. But I'd rather hit the break even button manually on these. Okay. So this is a strategy that actually creates the bracket. Like there's a 10-tick stop on this and a 30-tick target on this. And I can move either of those around anytime I want to. I just grab it and drag it around if I want to. But right now, we're just waiting for this thing to push up. Okay. And well, if it doesn't, our risk is defined as 10 ticks. That is another reason why I use the range bars, because the risk is predefined. I don't have to ask myself when I get into a trade, well, what's the profit potential compared to the risk? I always know what the risk is. The risk is always going to be 10 ticks on a 7-tick range bar. Okay. Again, anybody that's watching right now, if you want to see any stocks, ETFs, cryptos, anything like that, Forex, just type in a symbol. Be happy to show it to you. On the high low on Microsoft on Google earnings after hours. I don't know about that, D. The high low on Microsoft and Google earnings after hours. I don't know about the after hours stuff. I can look it up. I can look stuff up for you and tell you what I think will be significant levels for it. Okay, let me use a market that's not doing anything right now. Slide this over right here. And we need 4 ticks in profit on this to bump the stop to break even. So when it ticks at this level right here, I'll bump the stop to break even. I'll look at that in just a minute, D, okay? Because I think we're going to get this to move up here in just a minute. I want to pay attention. I don't want to lose the one opportunity I might have to bump that stop to break even. See these numbers up here? It's going to go to the high of the day. I'm thinking it's probably going to do it right now, but I'm not sure. Here, I'll use the Russell to look at that other stuff. You wanted to see Microsoft, right? Okay, let's look at that on a 30-minute. Right there. Stop. I'll bump it. Okay, so let's slide this over a little bit. The gold may give us a trade here too. This is an inverted head and shoulders. I don't know if you see that. See, this is an inverted head and shoulders, and this is your neckline right now. So this is primed to go up right now. If it breaks that neckline today, it should shoot up to 358. Would be what I think. Okay, 358 is what I'd be looking for on that. At least 358. Yeah, I could watch this. It's just got to hit here. And when it's there, I'll take the risk off, and then it's going to do it in just a second here. And then I'll be able to look at that other thing, a little bit bigger picture. Okay, well, I guess I can right now. I don't really have to. There it is. Okay, so break even. I just didn't want to miss it, the chance that I had to do that. Okay, so now let's just look at this a little better for you. I don't need to see the chart anymore for this. Now, with this, it's just a matter of risk management, okay? If we go back here to the trade rules, with the exit, look left, the prior swing high or low for support resistance. Prior swing high is right up here, okay? Find potential numbers that it's searching for in the DOM. We've got those right there, right there. This whole line of them right here is what it's trying to get up to, okay? So I don't really need to look at that anymore to manage it. I just need to trail my stop and take profit. So on a 30-minute, we're up above the ribbon right here. I don't know in the meantime, between now and the end of the day, if it's going to pull back down and test the ribbon, but you see this is days worth right here in a 30-minute chart. So if we bump this down to something a little more manageable, like $1 a bar, it gave a long back here at 346. And what did I say I think it's going to get up to? 358. Is that what I said a minute ago? 346. Yeah, 358 is where I think it's going to get up to. I'm going to lock in 1 tick on this ES trade. Okay, that's what I think is going to happen with that. If the earnings are good, it should run right up to 358. Okay, that's what I would think. You have an inverted in the shoulder pattern there. Right, so the ES, I'm locking in 4 ticks on this right now, and it should make it all the way up there. Right, but I would go for this. Now let me minimize this so we can go back and look at the chart. The swing high is right here at 46.02. That's a swing high right there. Now the reason I say that's the minimum that it should do is because when the charts are running, this is what they should do. Right, they should go up, then down, then up, then down. Then when it goes back up, it should exceed this right here to continue the trend, right? So that right there is this right here, all right? And this right here is where it wants to go. This right here is $350 locked in right now, okay? If I drop it right there, then that'll be $420 locked in. Okay, I do think it's going to go higher, but I'm happy taking that profit right there. It may pull back and give us another shot at it here in a few minutes, but that's exactly what you expect out of a trade right there. Okay. Now, if you want to hang out with that trade and see it break the swing high, then you can. You know, if you want to stay in that, wait for it to break the swing high, you can do that. But I have a limited amount of minutes in here, and I just used 17 out of 30 of them for that one trade. All right, so XAU, USD, and DXY. Let's do DXY first, okay? DXY, US dollar index. Which one of these do you want to look at? Come on. I think that's me. I'm pretty sure that's me. Maybe not. No, I think I'm 172.
Not me.
I gotta reconnect over there. Okay. So which one, what was it you wanted to look at? DXY. DXY. The dollar index. This one. Okay, so this is what it looks like on a 30-minute chart, but let's break it down a little more. I'm pretty sure 116 is me, so I have something myself signing on somewhere else. Now we want to look at this on a time frame. It's $100 a share, so let's look at it on a 50 range. All right, so each bar is 50 cents. Okay, we're still going to have to adjust the sensitivity in here. I am going to change it. I'm going to do that tonight. Change it so the sensitivity is actually at the top instead of at the bottom. So I don't have to scroll down every time to get to it. All right, so the sensitivity on this needs to be less than what it is. And we'll try 0.01 and see what that does. And slide it over. Okay, that's pretty good right there, 0.01. So what this is suggesting, this still hasn't gotten any higher. The NQ is actually given a trade right here. I got to check the NQ and make sure it's coming off a higher swing, but let's just finish doing this for right now. So far, this was today. All right, we had a green arrow right here that did not put in a higher swing. What we have right here that's about to set up on this, if we get a short, if we get a down close and it pulls it out of the overbought right here. Okay, the NQ did have a trade here. Just bring it over. So you see the NQ did have a trade right there. All right, here it is. It bumped my stop, not to break even plus a tick, but there, now it's a break even plus a tick. I'm just gonna lock in 4 on that. Now the NQ is going up to the high of the day. I have a 30 tick target on that automatically. Okay, but so I'm gonna get 4 ticks or 30 ticks on this NQ trade. If you look at the prior swing high, it's just right here at 704, 75. Yeah, this is the prior swing high right here. I think we're gonna go through that right now. All right, so I'm gonna get 4 ticks or I'm gonna get 30 ticks on this. But I could just lock in right here. You know, if I put it right there, then it'd be 24 ticks. If it just barely breaks the prior swing high and the high of the day. But I think if it does, it's going to go at least that much. So I'll leave this here for a second. Sorry. I know that was a little bit of a distraction. I was talking about this right here. Okay. This right here on the dollar index, or the DXY. If we get a down close on this bar, now it's got a high These are what, 50 range bars, right? Yeah. So this bar has got a high of 450, so it's going to have a low of 400. If you get it down close and it pulls it out of the overbought, you have a green arrow right here. And what I would anticipate out of that green arrow would be a push down to this level. Now there's a couple of things that are in play right here. Let me just point that out and show them to you. This is so aggravating. That's me knocking myself off and on again. One of the things that I was going to point out is this. All right, we just hit the 30-tick target on that, and we're going on the NQ. I had a good feeling we were going to hit that 30-tick target on the NQ. This right here is one of the things I want to point out. This pullback right here is a 50% retracement of this whole move. I know it pulled all the way back down here, but it's still at the 50% part of this whole move from top to bottom. So this could act as resistance right here and push it back down. This move right here exceeded the 50% and got all the way down here to the 24% retracement right there, and it bounced off of that back up to the 50. So the 50 could act as resistance right now. And if it does, it should push all the way back down to here. Okay. The initial thing I would be looking for, as always, is going to be the prior swing low, right? That's what I'd be looking for in that case right there. Right, so on the NQ, we just picked up 30 ticks on that. Go back here so you can see that. So what did we get so far? We got some profit on the ES, so we just got profit on the NQ. The NQ was a trade right here. Now this trade right here, guys, I didn't wait for the black arrow on that one. I took the up close off of this bar right here. Okay, let me show you the rules. That was this right here, a long trade without the slingshot. Right, I think it was the same thing with the ES, wasn't it? Just a minute ago. No, the ES had, oh, this one here. Yeah, it was the same thing with the ES. It was a long trade without the slingshot. Now I got the black arrow after I was in the trade, but I was looking for it to get to the prior swing high like this one over here did and like this one did. Okay. So XAU USD you want to see now too, okay? Forex, there's two of you guys that want to see the XAU USD. So let me do that one next, okay? XAU USD. You want to look at this one, right? Do you want to look at forex.com, or does it matter to you guys? I'll just choose this one. Okay. So this is what it looks like here right now. And this is what it looks like with it this high. You're going to want more than a 50 range on this. You might want a 500 range on this. So each bar is $5. Okay. So each bar is $5. And with it that way, the sensitivity is pretty close to right. What it looks like right here. Okay. We've changed directions right here. The long-term direction was bullish. It just changed to bearish. Gave you a couple of pullbacks here with the black arrows. Now each bar in here is $5. Okay. So what I'd anticipate is that it's going to pull back up and hit the ribbon and maybe give you another trade. But let's do this. And see, I'm looking back here right now. There was support back here, but not enough to support to put in a new swing high. So it's really kind of, it's really choppy and sideways in here right now. So that is what it's looking like. If it does pull back up here and give you a down close off the ribbon, you'll have a green arrow. You'd really be looking for it to, you want it to get through the swing low right here. If it gets through the swing low, then it's got a long way to go down. All right, all the way down here to 58.60 is what I'd be thinking. All right. Yeah, I should say, sorry, I haven't said this yet. If you guys do not follow us on TradingView and you want to follow us on TradingView, hit the follow button, because you'll get notified when we do things like tomorrow morning. Tomorrow morning, we're going to be doing a live stream starting at 9:30. It'll be all futures, but it'll be live stream starting at 9:30 to 10. So you'll be able to jump in our live room that we do every day. Okay. Be notified of things like that, because we don't do that every day. All right. So we grabbed this one earlier, and this right now is trying to pull back and hit the ribbon. If it does hit the ribbon and it rejects It gets rejected from the ribbon. You want to see it get down below this. If it gets down here, you want to make sure your stop is at break even. All right, so with a 500 range, it's $5 per bar. You'd probably want to risk $7, $7.50, something like that. Okay, should be like a bar and a half on this. Okay, so that's the XAU USD. Now, there was a request for another one in here too.
The New Zealand dollar versus the Swiss franc.
Okay, and
ZD.
CHF. Okay, I'll just use this one. And this, we gotta make an adjustment too. You got a whole bunch of decimal places like that. The sensitivity is gonna need a big adjustment. So you go in here to inputs. I'm going to change that tonight. Sensitivity is not going to be at the bottom anymore, since it's one of the things we change all the time. I'll put it up at the top. How many digits am I at? 5. Let's try that. Okay, that might have been a little too much. Let's take one of those off. There we go. That's a little closer. And what you want to see is where it gets flat. That's where you want it to show a no trade zone. That's what these areas are right here. These are no trade zones. Okay, so with this one, let's see. Let me do this, and let's crunch it up a little bit so I can see left. All right, well, this has already hit some significant spots here. Looking left, I'm gonna have to look at a bigger time frame to really look left on this. I would be looking for a pullback up to the ribbon, back up here to the 54.5 or 0.54 half. You want to see that get up into the overbought, probably. If it hits the ribbon without putting that in the overbought, that'd be okay too. But you probably want to see it into the overbought. So when it pops out like this one, or like this one, you get a nice green arrow on that. What I would anticipate, if it does do that, I'd anticipate it getting here. But now that we've looked at this, let's get on a larger time frame. Okay. Now, this larger time frame is crunch everything up. I'm guessing we don't have a lot of volatility in this. Yeah, we don't have a lot of volatility in this. So let me see if I can spread this out so you can see anything. Nope, I can't. Oh, there we go. Okay, that's a little better. All right. So let me go back to the 30-minute and do that. There we go. All right, so on the 30-minute. This level right here, which is the swing low we just looked at, 53.750. Is significant, but the next level's all the way down here at 53.5, 52. Okay, so if you go back here to our $5 bar, $5 bar, that's way too big for this. You don't want a 500 range for this. Well, we'll look at it here anyway. It's 500 ticks, 500 pips for each bar. What was that level I just looked at a second ago? It was all the way down here, 53.542. Okay, this one is saying down here. That's way too big for this time frame, though. And it's way too big of a time frame for this stock. This this pair. Let's get it here. Now I'll have to adjust it again. Sensitivity, what time is it? Oh crap, it's 1:30 already. This one went by really quick, but I'm glad you guys are asking to see stuff. See, you just have to set the sensitivity so it catches the flat spots. Okay, and then after you have it right for the flat spots, which are really the direction changes, then the rest of it will take care of itself. Leave the arrows where the arrows should be. Okay, so like right now, what it's saying is if it pulls back up here and hits the ribbon right here, then it should push it down to 53.5 is what we had said a few minutes ago, right? Probably down here, 53, yeah, probably down here. This one right here, 53.548 to begin with. All right, that's what it's looking like. Okay. All right, so thanks for asking to see all these things, guys. I encourage that. I also want to remind everybody that we're going to be doing a live room tomorrow, 9:30 to 10. We'll do a live stream. Now we do the live room every morning from 9:30 to 11:30. In there, we just do futures. So you'll be able to see us do everything that we've done here for 2 full hours. The gold's got a short right here too. For 2 full hours in the morning tomorrow. That's what we do every day. 2 full hours every morning, 9:30 to 11:30.
If you take the trial.
If you take the trial, yes, you'll be able to get in there for those full 2 hours. But tomorrow morning, you can get in from 9:30 to 10. Right? We'll do a live stream tomorrow. I'll create that tonight, so you'll be able to sign up for it whenever the time rolls around tomorrow. Right? But for right now, I've shown you what I think is going to happen with all those other things that you asked me about. I don't know what's going to happen with that Microsoft. And wait a minute, you asked me about Google too, didn't you? Didn't you, D? Let's look at Google really quick. Okay, I'll do this really fast if I can. Google's right over here, right? Where are you? Let's just Google, right? G-O-O-G. Okay, and that is trading at 120. What kind of range do we have? 50 range isn't too bad. Let's minimize that and look at it this way. So it suggested going long this morning back here. It's gone through this level right here. This, if we crunch this up, you'll see. I think it's going to have a similar pattern. We have a similar pattern. I was looking for the similar pattern. Is the other one that you would ask about, D? The Microsoft. Microsoft has a clear inverted head and shoulder. This isn't as clear. But if it's positive, and I think it probably will be positive results, it's got just a few areas of resistance up above right here, looking left. And that's just looking left. You know, I don't know. I guess it is looking left after over a few weeks right there. I wouldn't think it'd go any higher than this. But you know, if we look at it on, let's get it on the 30-minute quick. On the 30-minute, yeah, it's looking about the same. Right up there, 127. 127-ish, so probably $4. Not that big of a deal. Depends how many shares you have. All right, that is going to wrap it up. If you guys aren't following us yet, hit the follow button, right, and to be notified whenever we do something like this. And we do these every day at 1 p.m. The one tomorrow that we're doing at 9:30 a.m. we don't do every time. So if you want to start following us, follow us. If you want to get into that free trial tomorrow, go to here, go to mytradingiq.com right here. Sign up for it, and then you can get into that for the rest of the week for the whole 2 hours, not just a half an hour tomorrow. Right? Sign up for the free trial. Go in here to trading platforms. Watch this video right here for TradingView. Give us your TradingView username, and we'll get you set up with the indicators today. Just set up right away. Right? That's a pretty quick process for us. All right. All right. Thanks for coming today, everyone. I'm going to pass this back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yeah, just 1 second.
Okay. Just 1 second for Dwayne. And for the live stream, guys, I am about to stop it right now. Okay, that is stopped. So now we're back in the regular stream.
All right.
All right. There you have it. Almost. Okay. There you go.
Recap of the morning session.
21 minutes. 7 trades, $770.
Good job.
Thank you. Thank you very much.
All right, guys, we were on gold. And here's where the market opened last night. We had support below us. When red and falling gets below price, then we know that's potential support. And it was. Red and falling, turned to blue and climbing. That sent us through the BBC right up to the target. And we pulled back to the BBC. We had a leg and a retracement, a leg and a retracement, and a leg and then a retracement. And then over here, we reached right down to the short target, pretty much to the tick. We got back above the BBC, and we hit the zone overhead. When price rallies up to a zone, we expect resistance. When price drops to a zone, we expect support. It's across all markets, all time frames. Silver, we were below the BBC, and we got below red and falling. It only takes 2 pennies to get your goal for the day on silver. Then price gets above the BBC, runs up to the zone, finds resistance, pulls back, and makes another run, and hits the target. We pull. Now, first, that zone's resistance, 2469/70, and it becomes support. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. When the SEP line crosses blue and climbing, price is most likely going to pull back to the BBC. It stands for bull, bear, cross. Bearish below the green line, bullish above. So you're just looking for opportunities on your smaller time frame to be long, as long as price stays above the BBC. On this pullback, we expect it to hold, just like we've seen it hold market after market after market after market. If you missed the first part of the broadcast, an hour after we end this broadcast, you can go to youtube.com/CFRN. Not only do we broadcast live every day on our YouTube channel, but we archive every daily broadcast. Currently, there's over 2,200 daily episodes archived for your educational viewing pleasure. Euro. Here's where we opened. We managed to get above the BBC, but we ran into the resistance from yesterday. Price drops back below the BBC, and you have red and falling. Takes you all the way to the target. Takes you all the way to the lowest weekly trading zone this week for the euro. And now, market found support at the zone. Pull back to the BBC, but we've got blue and climbing. It's potential support. If the support holds at blue and climbing, that will put us back above the BBC, but where this bearish cross took place, that's potential resistance. This swing high, it's potential resistance. And of course, support is at the zone, and if we spike the zone, there's support there. Again, tomorrow's Fed Day. Your best bet is, if you're going to do any trading tomorrow, get it done early, because not only is the Fed announcement at 2, but then at 2:30 you have the press conference. That's where the real volatility kicks in. People start asking questions, and Jerome will take questions from whoever's in the audience, provide an answer. Unlike some press conferences we see these days, where they're scripted and staged, he just takes the questions. Somebody has a question that's allowed in the room, he lets them ask it, and he gives them an answer. So going back to the daily chart, we are approaching the July 19th high. That high was 46.09 and a quarter. Today's high so far, 45.92 half. Keep in mind that on this day, where we put in a new recent swing high, not an all-time high, but a recent swing high, we retrace 50% by the time that daily session closed. If we get above the July 19th high, the next area we look for resistance is at 38% fib extension. If price drops below the 24% fib extension, where we found support 1, 2, 3 days, then we expect to pull back to the BBC. The pullback holds more often than not. Eventually, it will trade through. So as price pulls back, you expect support, but you're prepared for the fact that it could trade through it. So then go from a bullish mindset to a bearish mindset. And that's the beauty of futures. They trade around the clock. We have traders around the globe. So alerts on the logic side can come out at 2 a.m. or 2 p.m. CTA report is published shortly after the Globex Open each evening. Globex opens at 6 p.m. Eastern, Sunday through Thursday. Today at 5 p.m. Eastern, that will be the end of the Tuesday session. Tonight at 6 p.m. Eastern, when the markets reopen, that will be the beginning of the Wednesday session. And all eyes, not just in the U.S., but around the world, will be on the Fed. And whether we get an interest rate hike or not, or whatever size the hike is, there will be plenty of volatility. And during the press conference, a lot of volatility. Now, volatility is good. Volatility that can be well managed. But the erratic, herky-jerky stuff you get off of an economic report, and especially the granddaddy of economic reports, Fed announcement, that's just gambling. So you need to have the self-discipline to just put the mouse away until the markets digest the announcement, digest the press conference, the market returns to its normal rhythm. If you don't have the patience and discipline to do that, you might not be a trader. To become a lifetime member, go to eminifuturestrading.com. Passport is lifetime access to everything we do, everything we've ever done, and whatever we do in the future. Once you purchase your passport, there are no recurring fees, no upsells, no nonsense. Not no way, not no how, not ever. Most things that say lifetime have a lot of little tiny print. Looks like E. coli crawling across the page. We don't have any fine print. Lifetime's lifetime. Not only will you, as a lifetime member, have lifetime access to the live training room, but you also have lifetime access to the weekly trading zones, unlimited one-on-one private mentoring, strategy that you learn, and the indicators that you own for life. They're fluid across all markets and all time frames. Futures, stocks, crypto, forex, ETFs, doesn't matter. As a lifetime member, you'll have access to the Logic 247 alerts for life, concierge trade alerts for life, and you'll be able to attend the Thursday night members only workshop. Everything a trader needs, all under one roof, one low price. 9 out of 10 new traders fail because they don't have someone to teach them, to literally take them by the hand and teach them how to trade. If you want a decent shot at becoming the 1 out of 10 who does succeed, then you need somebody to show you how to do the job. 2 hours of live training, Monday through Friday, every trading day. Limited one-on-one private mentoring. And around-the-clock support via Telegram. If you have any questions, call Valerie at 949-42-EMINI or send an email to support@cfrn.net. And if you're ready to become a lifetime member with no recurring fees, no upsells, and no nonsense, just go to eminifuturestrading.com. Your passport today. We'll get your indicator set up today. And the journey begins. eminifuturestrading.com. All right. Let's go to our good word for the day. Wrap it up. Yesterday, we started talking about how to develop patience. Here's part 2. Whoever is patient has great understanding. Proverbs 14:29. Patience begins by changing the way you view something. When you're impatient, you have a narrow perspective. All you see is yourself, your needs, goals, schedule, desires, and the way people are messing up your life. Basically, the root of impatience is selfishness. Try to see things from the other person's point of view. If you want to succeed in marriage, learn to see life from your partner's point of view. If you want to succeed as a parent, learn to see things from your child's point of view. If you want to learn to succeed in business, then learn to see things from your customer's point of view. If you want to be a successful employer, learn to see life from your employee's point of view. Try to discover why the other person feels like they do. If you never had to deal with irritations and interruptions, you would never develop patience. You must accept the truth that God is directing your steps and that trust doesn't require explanations. The Bible says in Proverbs 20:24, the Lord directs our steps, so why try to understand everything along the way? Patience is a mark of maturity. When babies don't instantly get what they want, they get upset. Maturity includes the ability to wait and to live with delayed gratification. Whoever is patient has great understanding, but one who is quick-tempered displays folly. Proverbs 14:29. A person of understanding and wisdom who learns to see life from another's point of view, including God's point of view, displays patience. So pray and ask God to give you a new perspective on things. And there you will find patience. And if you want to become a consistently profitable trader, you'll learn that self-discipline, self-control, and patience are things you can't buy, rent, or borrow, but you can learn in your unlimited one-on-one mentoring sessions. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.